Hi, good morning, everyone. So welcome to our daily briefing today. So today is 1st October. It is Friday, TGIF, man. Okay, so let's start our briefing by taking a recap on previous important economic data. So the first one is UK GDP growth rate year-on-year final Q2. So previous is negative 5.8%. The forecast is at 22.2%, and the actual is 23.6%, which is slightly higher than forecast. So it is a good news for GBP. Okay, so the next one is CH Switzerland KOF leading indicators September. So previous is 113 and 5 and forecast is 110. So the actual is 110.6, so which is slightly higher than the forecast. So it is a good news for Swiss francs. Then we go to the next one is Germany unemployment change September. So previous is negative 53,000 and the forecast is negative 33,000, but the actual is slightly higher because it is negative 30,000. So it is not a good news for euro dollar. Then we go to the next one is Germany inflation rate year on year preliminary September. So previous is 3.9%, the forecast is 4.2%, and the actual is 4.1%, which is slightly lower than the forecast. So it is not a good news for euro dollar. Then we go to the next one, US GDP growth rate quarter on quarter, the final Q2. So previous is 6.6%, forecast is also same as 6.6%. So the actual is 6.7%. So it is actually a good news because actually it's higher than the forecast. So this is good for the currency, which is US dollar. And then we go to the next one is US initial jobless claims 25th September. So previous is 351,000. The forecast is at 335,000, but the actual is higher than the forecast, which is 362,000. So this is not a good news for US dollar. So let's take a look on the market graph here. So we can see that the US dollar index went down last night because of this economic data, which is US initial jobless claims. And also we can see that because of this US dollar index went down, then it caused the market volatility to all other trading instruments like commodities and also the forex major pair. Okay, so we go back to our PowerPoint here. Then next part is previous day market volatility record for gold. It rise 420 pips last night. So what happened on the gold market? Let us read the factor here. So the price of gold rose to its highest level in a week on Thursday. Spot gold rose by 2.2% to $1,764.26 per ounce in intraday trading, which was the highest intraday level since September 23. So an employment report showed that the recovery of the US job market was uneven, so prompting investors to seek hedging. The number of first-time initial jobless claims in the United States has unexpectedly risen for 3 consecutive weeks, and the number of applicants in California has soared again after the release of the data. The US dollar fell, so boosting the attractiveness of gold to non-US investors. So what happened on the gold market? So we can see that because of the initial jobless claim, here the US job market was uneven, prompting investors to seek hedging. What hedge they use? What to hedge? Use what as hedging, because they use gold. So you can see that the gold demand of gold is getting higher and higher because of this issue. Okay, so we go to the next one is WTI. Sorry, this one I will change it later. So WTI, so it rise 290 pips last night. So what happened? Let us read the factor here. Crude oil closed slightly higher in late trading. Okay, so early US oil and Brent oil distribution fell by more than 2% in the trading session due to reports that China was preparing to buy more oil and other energy supplies to meet growing demand, offsetting the unexpected US crude oil inventory from rising and price pressure from strengthening US dollar. So because of this report, the WTI went up last night. Okay, so in next part, when come to today in EU session, so which important economic data we have to focus. So there are the important economic data we have to focus today. Okay, so we have euro dollar and pound. So let's take a look on the first one. Germany retail sales month-on-month August. So previous is negative 5.1%. The forecast is 1.5%. Okay, it is higher than the previous one. So maybe this is a good news for euro dollar. But if if higher than expected reading should be taken as positive for euro dollar, while a lower than expected reading should be taken as negative for the euro dollar. Okay, then we go to the next one. Germany again, market manufacturing PMI final September. So previous is 558.5 and the forecast is also the same, 58.5. Those data release time is at 3:55 later in the afternoon. Okay, so if higher than expected reading should be taken as positive for the euro dollar, while a lower than expected reading should be taken as negative for the euro dollar. Then we go to the next one. It's UK market CIPS manufacturing PMI final for September. So previous is 60.3 and forecast is 56.3. So the data release time is at 4:30 later. So if higher than expected reading should be taken as positive for GBP, for pound. Okay, while lower than expected reading should be taken as negative for pound. Okay, then we go to the next one is EA euro area inflation rate year-on-year flash September. So previous is 3%. The forecast is at 3.3%, slightly higher than the previous one. The forecast is at higher. Okay, so the data release time is at 5 o'clock in the evening later. So if higher than expected reading should be taken as positive for the euro dollar, while a lower than expected reading should be taken as negative for the euro dollar. Okay, then when come to US session tonight, okay, we have to focus on these a series of US important economic data. Okay, so let us take a look on the first one. Okay, so US personal spending month-on-month August. So previous is 0.3%, forecast is at 0.6%, and the data release time is at 8:30 tonight. So if higher than expected reading should be taken as positive for the USD, while a lower than expected reading should be taken as negative for the USD. And then we go to the next one is US personal income month-on-month August. Previous is 1.1% and the forecast is at 0.3%. The time is at 8:30, same as previous one. Okay, same as just now that one. So if higher than expected reading should be taken as positive for the USD, while a lower than expected reading should be taken as negative for the USD. Then we go to the next one is US PCE price index year-on-year August. Previous is 4.2 and the forecast is remain unknown. But the actual is going to release at 8:30 tonight. So the impact on the currency may go both ways. So you guys have to take note. Okay, so a rise in CPI may lead to a rise in interest rates and a rise in local currency. So on the other hand, during economic recession, a rise in CPI may lead to a deepened recession and therefore a fall in local currency. Okay, so we go to the next one is US market manufacturing PMI final September. So previous is 61.1, the forecast is at 60.5, and the data release time is at 9:45 tonight. So a higher than expected reading should be taken as positive for the USD, while a lower than expected reading should be taken as negative for the USD. Then we go next one is US ISM manufacturing PMI September. So previous is 59.9, but the forecast is at 59.6, which is slightly lower than the previous one. So the schedule is at 10 o'clock later, tonight. Okay, so if higher than expected reading should be taken as positive for the USD, while a lower than expected reading should be taken as negative for the USD. Then we go to the last one of important economic data today, which is US Michigan consumer sentiment final September. So the previous is 71, same as the forecast at 71. So the data is going to release. The actual of data is going to release at 10 o'clock tonight. So same as the ISM manufacturing PMI. So if higher than expected reading should be taken as positive for USD, while a lower than expected reading should be taken as negative for the USD. So we go to the last part of our daily briefing today, which is market update for gold. So the resistance level of today is 1764. For the support level of today is 1741. My personal opinion for today, I will take it as a bullish. So why? Okay, let us take a look on the factors here. So the sharp rise in the price of gold was mainly due to the 3 consecutive weeks of rising data in the initial jobless claim. So we can see that the gold rise because of the initial jobless claim data. Okay, and the fall of the high US dollar. So US dollar went down last night, right? Okay, so these are the main reason that gold price went up last night. Okay, so in addition, the stock market also retreated sharply. So we take a look on the macro cap. Is it real? Oh yeah, is it true? Because the stock market went down last night, not really good, not really doing well last night. Okay, so So we go back to our PowerPoint here. However, the Fed's expectations of reducing bond purchases during the year still limited the rise in gold prices. Okay, so the price of gold rose sharply on Thursday, which is yesterday, and the daily line broke through the resistance of the 23.6% of the Fibonacci retracement level. Okay, so and the short-term downward momentum was eased. So there is a chance to challenge the downward trend line above in the day. So where is the downward trend line? So this is the downward trend line. We can see that the orange color here. So this is downward trend line. So it is saying the gold price may challenge the downward trend line here, but we still have to look for the have to focus the resistance level of 1764 here. So if the price really break through the resistance level, then the second target we will put at the trend line here, not the R2 yet. Okay, so it's a trend line here. So pay attention to a series of US economic data in the day, especially the PCE price index, personal spending data, and the ISM and the ISM manufacturing PMI. So that's all for our briefing today. I wish you have a good day and enjoy weekend. TGIF everyone. So see you next time. Bye bye.